In this video, we'll be looking at accounting for partnership. We'll be going through an illustration starting from question 1 and breaking down the solution into short episodes to enable a seamless understanding of the topic. Let's begin with question 1. Accounting for partnerships. Kako, Kobe, and Kiro started a partnership on 1st of January 2021, sharing profits and losses in the ratio 3:1 respectively. According to the partnership agreement, partners' capital accounts and drawings were to attract interest. Also, Kako guaranteed Kiro a minimum share of profit of 5,100 Ghana cedis. The trial balance of the partnership as at 31st December 2021 after the preparation of the statement of profit or loss for the period was as follows. The following entries have not been made in the books. A monthly salary of 625 cedis to be paid to Kiro. B. General expenses of 3,750 cedis paid to Kobe, personally on behalf of the firm. C. Cash drawings made by partners, Kako, Kobe, Kiro, respectively. D. Goods taken for personal use by Kako. D. Interest on drawings from all the partners, Kako, Kobe, and Kiro. F. Interest on loan. G. Interest on capital accounts. H. Capital accounts were to remain fixed. You are required to A. Prepare the profit and loss appropriation accounts after adjusting the reported profit with the above information. And B. You are required to provide the statement of financial position as at 31st of December 2021 for the partnership. Be reminded that the statement of profit or loss for the period is this table we have here. But then these entries were not made into the books as of 31st December 2021. So we are supposed to ensure that these entries are made into the books, which were excluded. To begin, prepare the profit and loss appropriation accounts after adjusting the reported profit with the above information. When it comes to partnership, the partners provide a capital, or they all contribute money, which is the capital, to the partnership, and they earn interest from this capital. Now, the interest that the business is going to generate, the profit is going to be shared amongst the partners, but then it's going to be shared based on the amount that each partner contributed. So that is why we have the ratio in which the money is going to be shared amongst the partners. Now, from the question, prepare the profit and loss appropriation accounts after adjusting the reported profit with the above information. So we're supposed to prepare the profit and loss appropriation accounts. Now note, after adjusting the reported profit. So what is the reported profit from the table? How do you know the profit that a business has made? To know the profit that a business has made, you must check the business's income statement. So their income statement will contain the profit that the business has made. So if you look from the table, the income statement has the profit or the balance 58,000 Ghana cedis. So this is the profit that was made before. This was the profit that was made on the 31st of December 2021. And then these entries were not made. So how do we adjust it? The thing is that if they had an income of 58,000 Ghana cedis, and then these entries have not been made in the books, then it means that when we make the entries into the books, the entries are going to affect the income statement in a way. So it is either going to remain the same, decrease, or increase. Now, the changes that these entries are going to make to the income statement is what we call adjusting the income statement. Because we are going to adjust it. It was a particular amount, which was the 58,000. Now, when you make these entries, it is going to affect the income statement, which means that you need to adjust the income statement, right? So that is what the question meant. Prepare the profit and loss appropriation account after adjusting the reported profit. The reported profit is 58,000 Ghana cedis. So we have to adjust this profit and make sure that the entries that were not made in the books are all accounted for. So now, how do we adjust this profit of 58,000 Ghana cedis from the entries that have not been made in the books? Let's go through it. Now, these adjustments are either going to increase the profit or they are going to decrease the profit. What are some things that are going to affect our profit or the profit of the business? One thing is general expenses. Now, if you have a business and you have made a profit, one thing that is going to decrease your profit is the expenses that you have made. So, when we are adjusting our income statement, we are going to subtract our general expenses, which is 3,750 Ghana cedis, from the profit in the income statement, which is 58,000. Again, if you go through what we have here, goods taken for personal use by Kako. So the goods that were taken for personal use, these are goods and not cash. So the goods that were taken for personal use by Kako, also be reminded that Kako is a partner of the business. So this is going to increase the profit in our income statement. So we are going to add the 17,500 Ghana cedis to our income statement, to also the profit in our income statement. So we are going to add, but with the expenses, we are going to subtract because it decreases our profit. Now, if we go along, we can see interest on loan. Remember, if you have a business and you have to pay an interest on a loan that you took, this interest you're going to pay on the loan is also going to decrease your profit. So in this case, we are going to subtract the interest on the loan from the profit in our income statement. So these, from the entries that were not made in the books, these are the accounts that are going to affect our income statement. 1, the general expenses. 2, the goods that were taken for personal use. And 3, the interest on the loan. These are accounts that will affect the business. So we can go ahead and then draw the table and then adjust our income statement just as I have stated. So inside our books, so you see adjusting income statement for the year ended 31st of December 2021. The balance from our income statement was 58,000 Ghana cedis. So we are going to add that. Goods taken for personal use by Kako is 17,500 cedis. So again, we are going to add to our profit. Now, general expenses, we see less general expenses because the expenses is going to decrease it. So you put that in a bracket and write the expenses was 3,750. So you put that in a bracket, meaning we are subtracting at the debit side. Interest on loan will also decrease our profits. So we subtract 5,000. Now, this, if you add this, you're going to get 8,750. Now, if you subtract this 8,750 from these two, after we add them, we are going to get 66,750. So we add the 58,000 plus 17,500 minus 8,750. And now we have our adjusted profit. So now we have included the accounts that were not, the entries that were not made in the books. So we have our adjusted profit. So if you go back to the question, we are going to, he said, prepare the profit and loss appropriation account after adjusting the reported profits. So now we have adjusted the reported profit in our income statement. So we can now go ahead and prepare the profit and loss appropriation account. So guys, that is it for the first part of the video. Don't forget to like and subscribe. I'll see you in the next episode and we'll go through this illustration. If you have any questions, feel free to leave it down in the comment section. Like and subscribe. See you in the next video.